Good afternoon, and thank you for joining us today for the ACS Access to Cash webinar. It's great to see such a range of retailers and suppliers joining today. So I'm going to take you through where we are now in terms of access to cash and touch briefly on some upcoming changes in digital payments. We're then going to be joined by Miranda Hewkin-Smith to present on the Bank of England's work related to cash before the Payment Systems Regulator detail what they're doing in terms of the Link ATM network and long-term solutions. We'll then open up into a panel, so please do submit questions via the Q&A function as we go through. But first, I'll start with a bit of context. So we all know that the ways that customers pay in store is changing. Those changes are putting pressures on the access to cash services provided by shops and really highlighting the retail cost of processing different payments. Yes, new payment methods are coming to market, which retailers are investing in, but cash remains valuable for millions of local shop customers and wider society. I'll explain why shortly. Access to cash is declining, but we're now at a stage where there is widespread agreement between retailers, consumer groups, and government on the need to act via legislation, with many moving parts on the work to do so for the long term. But if we take another step back, what payment services are currently available in the local shop? You can see on the slide here that cash acceptance is almost universal across the sector. Retailers continue to take on contactless functionalities via payment terminals, but are also actively investing in mobile payments, for example, Apple or Google Pay. And generally, the payments offered in store are only going to diversify further in line with what the customer ultimately wants. We can also see that consumers value access to cash services. And that's those again on the slide. Cash machines are the most valued service to be found, followed by post office services, which also supply over-the-counter access to cash. As an organisation, we are explicitly payment neutral, but this does offer some insight into the role of cash in the convenience sector. But regardless, retailers are very much aware of the mega trend away from cash use. These graphs you can see here are based off polling of 1,200 independent and symbol group retailers across Britain, but before anyone had heard of COVID-19. You can clearly see here that retailers do not expect cash to be the predominant payment method of choice into the future or expect to handle more cash in the business. Now, if we look towards customers, so local shop customers tend to use cash for lower value transactions in store. Contactless payments have, in fact, seen many low value transactions go across to digital. But customers do still like to use up loose change, and cash-reliant customers are more likely to spend little and often. Top right graphic on this slide follows consumer research by Britain Thinks for the PSR, as I say, we'll hear from later. What's worth noting here is there are reasons why customers choose different payment methods. So yes, contactless and mobile payments are perceived as time-saving, but cash is physical, and that makes it graspable for a lot of people and is why they may still choose to use it. We also know that the Financial Conduct Authority research has uncovered that there are 1.3 million people who are entirely unbanked, so therefore don't have a bank card and are reliant on cash day to day. In fact, 17% of UK adults are unsure how they would cope in a cashless society. So yes, cash use is declining, and for many of us, it might not be in our personal payments mix at all. But cash does remain vital in the day-to-day life of millions. Everything's been impacted by COVID, and payments is certainly no different. But the main impact has been to accelerate these existing trends. So this graph from the Retail Data Partnership takes data direct from retail EPOS systems and shows there was a marked decline in the proportion of transactions paid using cash as the first national lockdown hit in March. That coincides with government messaging, which encouraged contactless spending, perhaps fueling a perception of cash being a virus risk, despite the Royal Mint later debunking those claims. But since the first lockdown, the use of cash has rebounded in summer and since remained fairly stable. Cash use in local shops hasn't recovered to pre-pandemic levels, but equally, it's not going to hit zero anytime soon. All of that explains how cash is declining but does need protecting. And that feeds into the government's central objectives on payments. And that's all about supporting access to cash, which is great, while also enabling innovation in payments, which is also great. The PSR, speaking later, have a vision for payment systems to be accessible, to be reliable, but also secure and value for money. That's already led to the banning of payment surcharging and capping the interchange fees related to card processing costs. But in the near future, we should also be seeing legislation to protect access to cash. The government committed to delivering that in March last year, and we're working closely with officials to make sure those new regulations work well for retailers. But the whole access to cash debate largely began with the decision by Link, the ATM network body, to reduce interchange fees. And they're those fees paid by banks to third-party regulated operators from which retailers are paid a chunk to host an ATM, either through a hole-in-the-wall machine or within the store. Link is responsible for managing those fees and regulated by the Payment Systems Regulator. But what's crucial here is that until the Link decision to reduce those interchange fees, those fees were set according to an independent cost study done by KPMG. That move away from independently set fees did aim to prevent the accumulation of ATMs in urban locations. We've all seen it, I'm sure, where you have 3 or 4 in close proximity, where perhaps they're not necessarily needed. Although the reduction has amended that to some extent, what we have unfortunately seen is an emergence of ATM black spots in more rural and suburban locations where you're likely to have only one ATM serving a large geographical area. And those machines are no longer commercially viable because of those artificial reductions to interchange fees. Thousands of convenience stores hosting ATMs in these areas especially have had previously free-to-use machines that have been unilaterally converted by their operator to charge customers. Many retailers have been wrongly blamed by customers for these conversions when it has been entirely out of their hands. And we have coordinated a consistent campaign since 2018, when this decision first came out, working closely with MPs in Parliament, also government officials and wider consumer groups to make the case for strengthening that Link network to ensure good outcomes for businesses and consumers. Ultimately, we have so far managed to cancel interchange fee reductions that were planned for 2020 and this year as well. But we do want to see independently set fees again, which account for operating costs and apply to all banks. Retailers cannot be left to subsidise the network. You may also be aware that rules are changing on cashback. Now, cashback is by no means a revelation, but could potentially become a larger part of how consumers access cash in the future. What's specifically changing here is that on the 29th of June, an amendment to the Financial Services Act will take effect, which removes the requirement for retailers to register with the FCA to offer cashback without an associated purchase within the same transaction. And that registration process has previously been burdensome for even the largest retailers. Now, we support this change. Retailers wanting to offer cashback without purchase should contact their card acquirer and point of sale terminal provider, if sourced separately, if they want to add this functionality when it is available. However, we have been cautious with ministers and officials about whether we will see any widespread adoption of this service. And that's due to three main issues that are reported to us by members. Firstly, the cost of processing cashback transactions. A higher transaction value means higher acquirer fees, but then also losses in staff productivity. So a cashback transaction, of course, must be supervised by a colleague at the till. Imagine transitioning all ATM transactions onto a cashback service at a labour cost which is going to be at least 16 pence per minute based on the current national living wage rates alone. And then also security concerns. So there is a perception that cashback would increase crime risk and insurance premiums by advertising that cash is available on the premises. And that's something we hear from retailers of all sizes as well. What we see here is that a valuable next step to boost adoption would therefore be guaranteeing fair remuneration, which reflects those costs I've just outlined and are seen on the slide there. Now, ATMs and cashback are key pieces to the access to cash puzzle, but there's also a valuable role being played by post offices within convenience stores, and there are other trials ongoing about solving local access to cash issues. That includes a one bank being trialled within Denny Co-op, deposit-taking ATMs, which are being offered by Note Machine, and also a cost-neutral cashback service from PayPoint. Now, the government committed to legislate back at the March 2020 budget, as I've mentioned. We've had the access to cash review since, led by Treasury, and the bank and the payment systems regulator will touch upon their work on this and on other related issues as parts of the Joint Authorities of Cash group shortly. We're expecting a consultation with specific proposals on what the legislation will look like in the summer, and this is going to cover minimum access to cash standards for customers and businesses, and who within government should ultimately be responsible for access to cash into the future. That consultation process is a landmark for, as the government intends, making sure payments work for everyone. And we'll be working closely on that and making sure members can input their views too. Banking body UK Finance, I just mentioned briefly, have separately coordinated their members to commit to protect cash infrastructure. And there's the Which Cash Friendly Pledge, which we are supporting as ACS. Any retailers wanting to promote that they accept cash in store can do so via posters and other assets from this campaign. So do just drop me a message if you're interested in finding out more or getting involved. I'll very briefly touch on digital payments while I'm here. So contactless, the value limit for contactless payments is going to increase from £45 to £100 on the 15th of October. We've already seen early in the spring the cumulative value limit before you have to physically input your PIN has increased from £120 to £300 there too. Now, these changes are going to affect all payment equipment provided to retailers and could potentially boost pay at pump, contactless pay at pump facilities, and enable contactless charging in a bigger way at electric vehicle charging points into the future. We're working via a industry stakeholder working group on this to ensure that these changes don't increase any risk of fraud for retailers, and we'll be issuing retailer guidance before that change comes in and share some in-store assets that retailers can use. Also looking at how we can prevent walk-offs from self-service transactions, whereby somebody taps their card, walks away with the goods without realising that they do need to put their PIN in as they have reached that limit. And that could include, for example, messages on terminals or mandated receipts or other things there. Again, if you're interested, do let me know. Also coming up on payments, which is an area that is constantly changing. The Payment Systems Regulator review into the acquirer market is set to conclude this year. We continue to call for action to investigate the separate scheme fees set by Visa and MasterCard, and open banking is on the way, and open banking could potentially inform retailer marketing and loyalty schemes via payments data and reduce card processing costs for retailers. Do let me know if you want some more information on that separately. But to bring this all together, local shops are making a valuable contribution to financial inclusion, and that's via ATMs, via cashback, via post offices, and other means too. But those services are largely facing different types of pressures. The use of payment methods in the sector, as I say, is diversifying rather than following a simple transition from cash to card, and that's useful to understand. But most retailers are still accepting cash due to its continued relevance. What we need now is legislation to secure access to cash for consumers. We see that ATMs are the only truly national cash infrastructure, and we do support restoring the independent setting of those link interchange fees that we've gone through as the best way to achieve that. But that's a quick run through from me. I'll now hand over to Miranda from the Bank of England, who's going to take us through cash trends, polymer notes, and their wider work on cash. Over to you.
Thanks, Steve. I will just share my screen. Thanks. So hello, and thank you again to the Association of Convenience Stores for inviting me to speak here today on behalf of the Bank of England. In this section of the webinar, I'm going to cover the trends that we're seeing in cash usage, particularly since the start of the COVID pandemic, followed by the policy work that the Bank of England is involved in relating to cash access. And finally, I will give an overview of the new polymer £50 note, which is due to be launched later this month. So let's begin by looking at the story of cash use pre-COVID. The use of cash for transactional purposes has fallen dramatically in recent years, as the use of debit cards and other digital payment methods has been on the rise. Debit cards finally overtook cash as the dominant payment method in 2017, and in 2019, only 23% of all payments were made using cash, and this was down from close to 60% a decade earlier. And while the transactional use of cash has been declining for several years, the value of notes in circulation has been increasing. And the apparent paradox of falling transactional use of cash but continued growth in demand for notes could be explained by an increasing role for cash as a store of value. This is likely to be driven by a variety of factors. Firstly, historically low interest rates reducing the opportunity cost of holding banknotes, or exchange rate fluctuations increasing demand for banknotes when sterling weakens, which is something that we saw in 2016 when sterling fell sharply. And also increases in cash demand when there are concerns about banks or the economy, which is something that was seen during the financial crisis of 2008 to 2010. So clearly, despite reducing transactional volumes, cash is still important to the public. Now let's look at what we've been seeing in cash use since the outbreak of coronavirus. The charts on this slide show that as a result of the pandemic, there's been a significant fall in cash withdrawn from ATMs. Looking at ATM withdrawals gives us quite a good proxy for the transactional use of cash. And what we saw in late March 2020 was that both the volume and the value of cash withdrawn from the ATM network overseen by Link were approximately 60% lower than the same period in 2019. And as you follow the dark blue 2020 line and the red 2021 line over time, you can see that the ATM withdrawals still haven't fully returned to normal pre-COVID levels. This is a good reflection of what we've all witnessed throughout the pandemic, which is a reduction in the use of cash for transactional purposes as more consumers turn to contactless payments during the pandemic. Similarly, we've found that preference for cash as a payment method has been gradually declining over recent years, and the pandemic has increased preference for contactless cards and mobile payments. So if you look on the left-hand chart, you'll see that the increased preference for contactless payment methods, so that's the grey, the dark blue, and the light green bars, takes slightly from cash, the light blue bar, but actually it takes mainly from the chip and pin debit card bar, which is the orange one. So as you can see, while yes, cash is becoming decreasingly popular for transactions, around 1 in 5 people, that's that 21%, still prefer to use cash for their everyday transactions. And those people still prefer using cash even in the midst of a pandemic when contactless payments have been encouraged, which implies that they are unlikely to change their habits in the future. And the right-hand chart shows that around a quarter of respondents are using the same amount or even more cash compared to pre-COVID. Now, what's perhaps most surprising about the trends that we've been seeing in cash use throughout the pandemic is that despite the decline in the use of cash during the pandemic, the value of notes in circulation has actually risen at quite an unprecedented rate, as you can see from this slide. So after a slight increase in demand for banknotes in late March 2020, around the time of the first lockdown announcement, the level of banknotes in circulation remained broadly flat until the end of April. And then from the start of May 2020, there was very strong growth in notes in circulation. And this occurred from around the same time that economic activity began to recover. The trend of increasing cash demand has continued throughout the pandemic. As you can see from this chart, the demand for cash has grown each time that restrictions have eased. And evidence from our discussions with large retailers suggests that cash use has begun to increase since the initial drop-off at the start of the pandemic, although it is unlikely to get all the way back up to pre-pandemic levels. So what does this mean? Why are there more notes flowing out into circulation when people are using cash less for purchases? Well, the number of notes in circulation can increase either because more banknotes are entering circulation by being issued from industry cash centres to meet customer demand, or because fewer are being returned from customers and leaving circulation. And what we've observed during the pandemic is that while the number of notes entering circulation has dropped, the number of notes leaving circulation declined by even more, meaning that the value of notes in circulation has actually kept increasing. And that, of course, begs the question of why aren't notes flowing back into industry cash centres as much as they're flowing out of them? Well, we aren't the only central bank seeing this trend of increasing notes in circulation during the pandemic. In fact, many other developed economies are seeing the same trends. So the US, Canada, and Australia, just to name a few. And the general thinking, which is also our thinking for the UK, is that it's being caused by an increase in the public holding on to notes, either intentionally as a store of value because the opportunity cost of holding banknotes is very low with the current low interest rates, and because of the economic uncertainty that comes along with the pandemic, or unintentionally because of the lack of opportunities to either spend or deposit the cash while COVID restrictions are in place. Now, I talked earlier about how important cash continues to be to many people as a payment method. So let's look now at the policy work that the Bank of England is involved in relating to access to cash. And as Steve mentioned earlier, the bank is a member of the Joint Authority Cash Strategy Group, JACS. And all 4 authorities in the JACS group are collaborating to take coordinated actions to secure the future of cash. You've heard a bit about what the Treasury are doing to further this work, and later you'll hear about what the work that the PSR, the Payment Systems Regulator, is undertaking. And I'm going to tell you now about one of the Bank of England's initiatives, which is contributing to this synergistic approach to solving the question of access to cash. So the wholesale processing side of the cash world is you can think of it like the plumbing. It's how cash flows into and out of circulation, how it gets to and from ATMs, banks, and retailers to end up in tills and wallets. So it's obviously a very vital part of the system. And the current wholesale cash system is set up for the cash industry as it has been in the past, with higher demand and greater volumes of cash flowing through. But now, with lower volumes of cash flowing through, the system is characterized by excess capacity and high costs, which will only increase as cash use falls, and so the cost per banknote will continue to increase. The risk is that left to its own devices, the wholesale cash system will fall apart in an unstructured way, leaving the public with no way to access cash. And this was highlighted in the Access to Cash review in March 2019. So in May 2019, the Bank of England convened relevant industry participants under the Wholesale Distribution Steering Group to identify a potential viable new model that is effective, resilient, and sustainable in the future. The WDSG has since invited industry to consult with the wider cash stakeholder community and to bring forward their end state model proposals. Work is still ongoing, but good progress is being made, and the next stage of the project is the development of a final business case for the industry to consider, and this is to be completed by mid-2021. Now I'd like to bring your attention to another way that the bank is working to maintain cash as a viable and secure payment option for the public, and I'd like to talk about the new £50 note, which is being launched later this month. The design of the new £50 note was unveiled in March this year. It features the scientist Alan Turing and will enter circulation on the 23rd of June 2021. The new note will complete our set of polymer notes, and there are two key security features that are common across all of our polymer notes, which means that if you can check one, then you can check them all. And those two key security features are the hologram image change, which is a foil patch that changes between the words pounds and 50, and the see-through windows. And on the £50 note, the metallic image over the window is gold and green on the front of the note and silver on the back of the note. All of our staff training materials have been updated to include the new polymer £50 note. These are all available to either download or order free of charge from our website. And just to give you an idea, we've got leaflets, posters, a computer-based training package, as well as our educational films. So there's hopefully something to suit your preferred method of staff training. By introducing polymer notes, we are making them harder to counterfeit. Now, counterfeits are rare, but it does pay to be careful. The banknote checking scheme is a free and voluntary scheme encouraging businesses to increase banknote checking at point of sale and build our relationships with businesses accepting cash as payment, particularly retailers. The Association of Convenience Stores is a valued strategic partner of the scheme, helping us to ensure that the scheme continues to provide value to its supporters. This slide shows some of the main benefits of signing up to the scheme, notably being the first to hear about best practice and banknote news. So the bank doesn't tend to put out counterfeit news publicly. However, this provides us with a trusted forum in which to do so. If you'd like further information or you'd like to sign up as a supporter, please email the address on the slide or visit the Bank of England website. Thanks, that's everything from me. So I'll hand back to Steve now.
Thank you, Miranda, for that excellent presentation. I'd just like to now hand over to Andrew Self, who's Senior Policy Manager from the Payment Systems Regulator, who's going to talk us through what PSR is doing in terms of meeting business and consumer needs and regulating the Link ATM network. So without further ado, over to you, Andrew.
Excellent, thanks, Steve. Can you, just before I kick off, can you confirm you can see my slides?
Yep, all fine.
Excellent. What I will do is turn my video back on. Right, excellent. Thank you very much for inviting the PSR along today to give you a bit of an update as to what we've been doing. For those of you that I haven't met, as Steve introduced, I've recently joined the PSR as a senior manager, so you may need to go easy on me at the Q&A later on this afternoon. But if I don't have the answers at hand, I'll make sure you get them later. As I think pretty much everybody on the call will be aware, the PSR is the economic regulator responsible for payment systems in the UK, and that includes Link, the UK's largest ATM network. Today, I'm basically just going to try and cover what our research says about the current state of cash, the challenges that some of those trends are posing, and what we're looking to do about it going forwards. So what's been the story so far? Well, the PSR's played a leading role in the access to cash debate for a number of years. I think one of and I think it's fair to say we want to ensure that the UK's cash system remains sustainable and continues to provide access for those who need it for as long as that's required or sustainable alternatives become available. In terms of our key role on cash, we issued specific Direction 8, which I'm sure a lot of people on the call have come across previously, to Link in October 2018. And our first review showed that it'd been quite successful in helping to maintain access to cash, really by doing a few things, but ensuring that Link has a coherent set of policies and processes in place to support that broad geographic spread of free-to-use ATMs. And our monitoring suggests that this has been relatively successful even through the COVID-19 pandemic. The other benefit that it's brought is just enhancing some of the transparency around the measures that Link has implemented in this space. Now, whilst significant progress has been made on access to cash in recent years, cash use has been falling, and we've seen a big take up in digital alternates, and that trend's really been accelerated through COVID-19. And as has already been mentioned, there is about 5 million customers that continue to rely on cash. And therefore, we've been working really closely with Link throughout the COVID-19 pandemic to make sure we understand the impact that that pandemic's had on the network and that cash remains available. So I'm now going to move on to what some of that research has shown. Now, despite recent declines, ATMs remain the most popular channel for consumers to withdraw cash. And I think it's fair to say we anticipate that this is going to remain a really important channel for many years to come. Despite this reduction in usage, ATM coverage going into the pandemic was actually pretty good. And this is something that we've spoken about a number of times within the PSR and across different bodies. At the start of 2020, the UK had slightly more free-to-use ATMs than it did 10 years ago. And I think one of the other really interesting bits of research that I've seen the PSR produce going new into the sector is how well people have coped with reduced access to bank branches and ATMs and fewer businesses accepting cash. And the FCA's Financial Life Survey gives some really useful numbers about the differences between people's stated ability to cope pre and post the pandemic hitting. So around 3 in 10 customers used online or mobile banking more regularly during the pandemic, and 2% said that they used it for the first time after that first lockdown began. And around 3 in 4 who were heavily reliant on cash in February 2020 told us that they'd coped with reduced access to bank branches and ATMs, and 73% said they'd coped with fewer businesses accepting cash. However, that doesn't mean it was straightforward for everybody. 1 in 7 and 1 in 6 of these groups, respectively, told us that they'd struggled or they'd not coped with that reduced access to cash over the pandemic period. So as I say, we've been working closely with Link, and we continue to try and refine our understanding of cash usage and needs. And again, as has already been mentioned, we work closely with our fellow regulators to really make sure that we've got a good evidence base to understand what those challenges are going to be going forwards, even if the current state of cash access and ATM provision looks to be meeting customers' needs. So what are those current pressures that we're seeing? Well, the role that Link plays is pretty important right now. They are making sure that there is that we're protecting and improving that geographic spread of free-to-use ATMs. But I think it's really important to note that these activities all incur costs, and this was alluded to earlier. and they require continued participation of members. And it's the banks and building societies and ultimately customers who need to meet these costs. And as use falls, that cost per transaction is increasing. So there's a number of real challenges coming in the short run, particularly around that cost aspect. And we've heard a number of suggestions through the engagement that we've been putting forward as to how some incremental changes to the current framework could help. And I'll touch on some of those later. But today, I think Link is performing an important role supporting the commercial provision of ATMs and plugging gaps where they are there. Future role, as I've said, we think ATMs will be an important channel for years to come. Though there may be some new and innovative ways to deliver cash. And again, we've touched on some of those community access pilots and the legislation for cashback without purchase already. So there is things happening in this space to try and make new and innovative ways of customers being able to access cash. But it does raise a number of really challenging questions for the regulators in this space. How best can we get industry to ensure the delivery of channel neutral solutions to meet gaps in coverage? How do we make sure that that's done whilst maintaining competition in the sector? How can industry continue to encourage innovation in both cash and digital services whilst making sure that the accessibility for the vulnerable is there when it's needed? What lessons can we learn from other countries in terms of both supporting cash infrastructure and probably in the take-up of digital services? I'll only touch on this slide quite briefly, conscious of time. We've done a lot of work with industry, trying to understand where some of those pressure points in the next few years are starting to build. And I think the three boxes on this slide give you a really good idea as the types of things that we heard from our work groups that we held jointly with some of our other regulators earlier in the pandemic. So a number of proposals have been put forward, and I'm just going to talk through these briefly one by one. So on interchange fees, I think this is it's been raised a couple of times on today's webinar, and it is an ongoing issue that people do raise. The sustained reduction in ATM transaction volumes during the pandemic is clearly impacting ATM deployers through reductions in their interchange revenues. And we're seeing interchange fees affect the overall cost of the Link network on banks and building societies, and then as I indicated earlier, ultimately onto consumers. So reflecting this, there's obviously been discussions about whether interchange fees should change. In those working groups, there was a few proposals that were discussed. To what extent do you want to be varying interchange fees based on where ATMs are located? For example, having lower ATM fees in densely populated urban areas that may be better served than those less populated rural areas. What about better ways to share the costs between those high and low density areas? But this is a tricky issue. And we also heard views from workgroup members that said that even with the current role that Link is playing, there's already pretty strong incentives there to make sure there is widespread free-to-use ATM coverage. And it's something that we'll continue to monitor and look at as we go through our work in this space. Moving on to deposit-taking ATMs. Again, this has been something that's been going on for a few years. And a few years ago, there was some work done on the technical feasibility of facilitating deposit-taking at ATMs via Link. And I think the shortcut of that is that mixed. Some issuers are at very different points in their capability for processing deposits via ATMs. So for some, it may be possible. For others, it looks quite challenging. And the last key theme that's come out of some of our work with industry is questions around a potential provider of last resort. This is a proposal where broadly you'd have one body responsible where there's a gap in ATM provision. And The work groups put forward a couple of different suggestions here. The first would effectively be a provider of last resort to be a backup for commercial options. And another option that was put forward during those workup groups would be something that was a bit more of a substantial body, which looks to replace some of today's commercial arrangements, making more decisions about where ATMs and potentially other cash access solutions should be deployed. Now, that one would obviously raise quite a significant shift from the current arrangements, which are commercially driven, to one that has more of a central planner approach. And I think there's a number of questions about how you could make that, that proposal work in a world where we want to ensure that competition is driving innovation and the best outcomes for consumers. But those are really just the key things that we've sort of heard from those work groups with industry. Which brings me quite neatly on to what are going to be our priorities going forwards. Well, you've heard me talk about SD8 a couple of times over the last 5 or so minutes. And the key thing here is we'll be publishing our update of the, we'll be publishing our second review of the SD8 regulation relatively shortly. I think what we're also looking at is what happens as SD8 comes to its expiry date on January 2022. And some of the key things is thinking about how that fits in with some of the announcements that we've seen from the Treasury in recent months, notably on legislation, which I will touch on. The other thing is that there is an awful lot going on that's industry-led at this point in time. So whilst regulators in this space have really been acting and will continue to act, access to cash is a shared problem that's not just going to be solved by regulators. We need to make sure that industry take a lead on progressing some solutions in this space. And therefore, we do welcome some of those recent announcements from UK Finance on taking forward action to protect access to cash in a way that complies with competition law as we look ahead to Treasury legislation coming in later in the year. Supporting innovation is one of the PSR's statutory objectives. And despite challenges presented by COVID-19, the last 12 months have continued to see innovation in the access to cash space. Again, we've touched on some of these in the webinar already, but we've seen banks delivering cash directly to people's homes that are shielding. We've seen mobile bank branches. So we have seen some interesting innovations in this space. We also really look forward to seeing the outcomes of the community access to cash pilots and how these innovations could help support access to cash going forwards. The last thing I just wanted to touch on is that we do think legislation will play a really key role in protecting access to cash over the long term. Currently, banks don't have legal obligations to meet their customers' need for cash. And as again has already been flagged, we're looking forward to the government consultation on legislation this summer following last year's call for evidence. In terms of I guess what I'll do, and given that I've got no time left, is just a quick summary of the things I've been through, which is that cash remains a priority for the PSR, even though we do expect the FCA to take on more of a leading role on access to cash going forwards. Cash availability looks okay for now, but we need to monitor this really carefully, and we're putting a lot of effort to make sure that across regulators, we've got really good information that allows us to look out and see where potential pinch points might be. As I previously mentioned, we'll be publishing our second review of SD8 quite shortly. We're looking forward to government legislation being brought forward. The other thing just to flag is we have said that we plan to publish our updated strategy for consultation in the current quarter, so please keep an eye out for that. And lastly, this isn't just a problem for regulators. We think industry is going to play a really important role here as well. So on that, I will hand back to Steve.
Thank you, Andrew, and thank you to Miranda beforehand as well. for those presentations. And just to reiterate, we'll be sharing the slides afterwards. They will be available on the member portal for anyone who wants to go and look back. But we'll now open it into a panel. So if Andrew and Miranda can show their video. And as I say, anyone joining, please do feel free to suggest some questions via the Zoom Q&A function as well. But I'll start with an opening one to both of you. I'll come to you first, Miranda, and then Andrew. Given what we've heard so far today, fundamentally, should cash be seen now as a core part of the UK's infrastructure, or is it more a commercial issue alone?
Yeah, really good question. And as a central bank, the Bank of England supports consumers having a full range of payment methods. But we do, of course, recognise that cash is a really important payment method for many people who rely heavily on cash. The FCA found in 2020 that 1.2 million adults in the UK are unbanked and 3.8 million are in financial difficulty. So for these people, cash is a vital payment method. And furthermore, a Bank of England survey in January of this year found that cash was the first choice payment method for a fifth of people, and over a quarter of people were using the same amount or more cash than before the pandemic. So we are also very aware that risks to the resilience of the wholesale distribution system are likely to grow over time as cash volumes decline. And that's why we're working to address this challenge by convening industry cash key industry players in the cash system to design and implement a new wholesale distribution model that will support the UK in an environment where cash volumes are declining.
Great. Anything to add to that, Andrew?
I would echo a lot of that. I think that, as you would have heard me say today, I think that the PSR remains that one of our key objectives remains ensuring that the UK's cash system remains sustainable and provides access to those that need it. And we expect that to be the case for years to come. So I don't think we're in a position where those kind of objectives have changed yet. I think there's a key need, and certainly I think pretty much every regulator in this space sees it being a key issue for the years to come.
Yeah, that I suppose something I touched on from your slides there, Andrew. You know, that it seems like there's a view at the moment that the link is broadly doing well in terms of coverage of ATMs across the country. Would that be a fair reflection of what you said there? And I suppose the question is the link network as it is at the moment sustainable for the medium to long term? And if not, what sort of things do we need to be looking at there?
So two really good questions. I think that first one, so I'm new into the payment space. So every time I've seen a briefing that comes across my desk that says, you know what, cash points are fine. There's a good amount of cash points. It's one of those ones that you do take a second look at, and you just make sure that information is correct. But I think that when you look at the data that we get from Link and you look at the geographic spread, customers do seem to be pretty well served today by the geographic spread of free-to-use ATMs. I mean, I've got some stats in front of me. I won't necessarily roll all of them off right now, but again, the numbers suggest that there's about 95% of the population that's pretty close to a cash point, and a free-to-use cash point at that. So I think it tells you that today there's been some good successes from the Link commitments and from SD8. And I won't go on to spoil the SD8 review that we're doing, but clearly we are looking carefully at these kind of numbers and how this is changing. But I think you allude to the real question, which is going forwards. Will that situation change? We expect to see the numbers of ATMs decline over time. And I think the key thing is making sure that a broad geographic spread of free-to-use ATMs is maintained. I think that's what we're hoping to achieve. As again I alluded to in the slides, Link relies on banks and building societies memberships, and I think that it is going to be something we have to monitor really carefully as we go through. And I think innovation being one of our statutory duties, is an area that we do want to see industry come forward with. And I think some of the things that you mentioned, Steve, around one banks or other potential means of provision do need to be looked at. We need to look at the whole sort of the multi-channel approach, be it cashback without purchase, be it innovative ways to get cash to people in the ATM network. Let's be honest, it's likely to be a mix of these things, not necessarily a one size fits all approach going forwards. So I think I've almost dodged a question, but I think that there is a role for Link there. It's probably going to need to be one that takes account of broader channels in cash, and we'll obviously be looking at this really carefully as we think about what may or may not need to replace SD8.
Yeah, it's an interesting point I think you make about membership of Link, and we've all seen what almost happened with the post office banking framework when Barclays threatened to pull out, and what that could have meant for that service. So it's interesting parallels there potentially. And one thing members tell us as well is the amount of use that goes through an ATM they host or other cash services as well can often change where there's been another local shop whose ATM has perhaps gone from free to use to pay to use, or the picture locally has changed. And I suppose that links into making sure that the regulation we have can account for where local ways of accessing cash can change quite suddenly. So I don't know if there's anything on that from you, Andrew, in terms of the infrastructure that's there, and Miranda in terms of demand for cash in different areas.
So I think the point you make around quick response is something that's definitely come out quite loud and clear of the community access to cash pilots. It's something I've heard a number of times, is that it's almost as if the access to cash pilots can't move fast enough to deal with some of those local changes. So clearly there is a challenge there in terms of how you make sure you get bank innovation to come forward and fill some of those gaps where you do see those local needs change really, really quickly. And I think that some of the things around the potential proposed legislation may well help in terms of legislating that kind of. We don't know what's going to be in that legislation in detail yet, but it's likely that will help in terms of incentivizing the banks to ensure that there is that broad geographic spread of access to cash availability. I think the other thing I would note is that clearly there's ways at the moment that communities can request new free-to-use machines from Link, and obviously we do expect Link to look through the sort of monitor carefully the provision of free-to-use ATMs. So I guess the challenges are definitely there. There's some current ways of dealing with that, be that through the Link community request scheme, be it through ongoing monitoring that Link does or that we carefully look at on an ongoing basis. But you're right, in the future, we're going to need to make sure that we're looking at these kind of issues quite carefully. And some of the lessons from the access to cash pilots, I'm really looking forward to seeing, because I think there will be some useful lessons for everybody there.
Yeah, and Miranda, on that point, in terms of again, we hear from retailers that the amount of cash v card transactions, to maybe simplify it slightly, does vary quite a lot depending on where a retailer is trading in the country, and how rural or suburban or other factors there too. Is that something that you see from your side in terms of how much cash a local area is recycling, and how might that change or into the future as well?
Yeah, so I think that's something that the PSR and the FCA are also working quite closely on. We do see in our payment preferences survey that I've alluded to before that there is quite a geographical split between kind of rural and urban areas and the amount of cash that's being used by consumers. And of course the different areas of the country in terms of north-south. That is definitely a factor.
Yeah, I suppose it strikes me that ATMs are the clear national infrastructure we have in place at the moment for cash. But whatever we have moving forward and wherever the legislation heads to, we need a system that is easy and clear for consumers to be able to know where to get cash, whatever that may be. There's plenty of different ways to access cash, but making sure that people are clear how to do that. But if I sort of move on to cash depositing facilities, because convenience stores as businesses, they obviously cash acceptance is pretty much 100% in the sector, which isn't the case across the country generally. But you also need to get rid of that cash somehow as well, and that's via change and those other things too, but also by bank branches, post office counters, or other collection services, those sorts of things too. And we hear that the cost of those services have been increasing at a notable rate over the past few years. I suppose a question to Miranda really. We've seen trends for accepting cash have changed slightly over the pandemic. Do you think is that temporary related to the pandemic, or something that we might see more of, or is that very much dependent on the cost of cash for business?
Yeah, so that's a really good question. And it is, as you say, it's something that we've seen happening throughout the pandemic. We saw a lot of news articles towards the start of the pandemic about retailers who were ceasing to accept cash for reasons of hygiene. And we held discussions with large retailers over the summer of last year, and found that actually the majority of cases where cash acceptance was ceased was mainly due to social distancing for staff and for customers alike. And in our more recent interviews with those large retailers, we found that actually most retailers are accepting cash and have been throughout the pandemic. There was some encouragement of contactless payments at the beginning, which again was due to social distancing. But that seems to have quietened down now, and most retailers really just want to allow their customers to pay by whatever means they prefer, and that is the customer choice is really important to those larger retailers, as I'm sure it is as well to the convenience stores within your membership, because they understand that that's what's most important.
Yeah, I think there's a comments come in. I can see from Bob here as well, and I think we all saw the encouraged contactless payments phrasing that was pushed out by the government. And it's interesting, I suppose, to what extent consumers now perceive cash as being less hygienic than card, which isn't what the evidence suggests in terms of handling notes and coins and as such, but to the extent to which that may be driving changes or not the other way as well. And I suppose Andrew, from your side, does the PSR look at how businesses get rid of their cash? We know there's self-fill ATMs and, as I say, post office counters and other things there, but any comments on that point?
So I think we have looked at some of this through the role of Link and ATMs taking deposits. I think a lot of the regulatory aspects here would sit with the FCA. So the provision of banking services and the extent to which a post office is a good enough replacement to a local banking service really does sit a bit more with the FCA than it does with the PSR. But our role in this has been looking at the extent to which you could use the Link network to facilitate some of those services. So we are interested, we do look at it, but it probably sits more with the FCA than it does with us.
And I'm conscious of time. I'm sure we could talk for another half an hour easily, but I suppose I'll ask Miranda and then Andrew. Firstly, what's coming around the corner from you guys, and do you have any positive message to leave people with who are attending today?
Yeah, so I think what I mentioned earlier about the wholesale distribution work that the bank is undertaking with the industry, look out for news on that in mid 2021 when the next stage is going to be announced. I think that's going to be really, really important for building an infrastructure that will support access to cash and ultimately support retailers with accepting cash by providing sufficient, by ensuring that the costs of accepting cash remain viable for retailers. And in terms of a positive message to leave the audience with, I think there's obviously been a lot of attention on cash over the past year, which I actually think is quite a positive thing, because I think it's really great to see that the industry is so engaged in it, and that we as authorities have been making some really great progress in protecting access to cash, as we've already discussed. So yeah, my positive message would be that a lot of key stakeholders are committed to ensuring the viability of cash for those who rely on it, and are making good progress towards that goal.
Anything quickly from you, Andrew?
Right, two things to sell. So we've got our second review of SD8, which we hope to publish shortly. Keep your eyes out for that. And probably for a more wider audience, we will be publishing our strategy for consultation shortly. So again, I'd really encourage people to keep their eye out and look for that one on our website. Two positives. We think legislation is really key to get this right, and it's really positive that we're going to see the Treasury come out with a consultation this summer. Industry needs to play a big role in this space, and we are seeing industry take on the challenge, at least to some extent, which is quite positive, and there's a lot of movement here.
Great. Well, I think that's all we've got time for. So I just say thank you to Miranda from the Bank of England and Andrew from the Payment Systems Regulator. Thank you everyone for attending. So yes, this recording will be going on the member portal, so you can watch it back there and see the ACS slides too. But other than that, that's goodbye from me, and speak soon. Thank you. Bye.